One thing I did think about was having a peek at MicroStrategy.
We got asked about this earlier, and we both want to trade it, but at the same time, we're really nervous about some of the news that's going on there. So having an options trade where your risk is defined ahead of time is the way to do this. Excited to go into this one.
Absolutely. So MicroStrategy, as many of us know, trades in tandem with Bitcoin. And because they have so much Bitcoin on their books. But notice this, I drew this box. I believe I drew it here on August the 8th. This box right here. And I duplicated it because it's a breakout formation. And look at where it's rotated from, right at the top of the breakout box.
It's almost like it had a blow off top at the top of that box and then came right back into the range. Bingo.
Exactly. And so now we have old resistance, new support, but we're in a thin part of the profile. So let me take a quick peek at what 180 days might look like. All right, still very thin, but there's opportunity here. So let's have a look at the chains. All right, let's look at what is the ATR 17. And they just reported they've lost money a few quarters. So a little bit of a messy patch for these guys. So I think we can go wide if we go far. Okay, so the next earnings event for them is not until February. And so let's take a peek at what MicroStrategy might do. We are sitting at 260 to 280 to 300. These are 20 wide and these are 10 wide. So let's take a peek and see if we went out wide. And we said, all right, let's try the 150s and then the 300s. Okay, if we did December and we said, instead of 260, let's change the body of these. Right, and again, we're going to go out really wide so that we can do a 1x3x2. And so we're going to go 1 at the 300. We're going to go 3 at the 320s. And we're going to go 2 at the 330s. And it's going to cost us 80 cents. Now, what that is something that says, listen, if this blows out, look, market makers are calling for 1.5 times the size of the average true range. So they've got a lot of vol pumped in to these options. And so this $75 one gives us $2,000 of upside. No downside except the $75 because we have no risk, right? It's a trade that's risked debit only. So that's the call side. And what we're doing is we're going round at about, okay, let's see what these guys are actually, 60, almost $70. So this is our strike, $70 away. This is what the market makers have put into it. This is what we're saying. If the market makers are right, it's not going to get there. And we have that $75 at risk. Ooh, pump it up already. Okay, now let's take a look at the downside. Where might this go? So I think 150 is pretty far away. And so maybe we try 170 to 150 to 160. Again, 1x3x2. 170 to 150 to 140. Okay, that one's 98 cents.
There you go.
Okay, and it's a bit closer. Well, not that much closer, really, but it is setting us right in that framework. And this might really where I believe that Bitcoin, gold, And some of the other commodities are the things that are going to get monstrously volatile in the next couple of days. That's just my gut feeling from that perspective. Okay. So I like this from MicroStrategy. If you say to yourself, Anne-Marie, I don't want to do this. Give me something else. The next best thing, because vol is so high, is an iron condor. And so let's see how much it'll give us underneath the 330. Let's go to 340 to 350. And then let's go to maybe 155 to 145. Okay, so I like to get at least 20% of the range, and that's what we have. So it's 237. Now you could do both of these, and both of them could win. Reason being is if it comes all the way to here but doesn't break, you're in great shape.
Yeah.
If it comes to here and it doesn't break, great shape. And so this actually gives us the money we need to pay for these, but it does require $1,000 of margin for each one. Now, let's see if January gives you a little bit more, but again,
for
you
the
never
same
know.
margin requirement, a little bit more. Yeah,
yes,
okay.
Yes, a little bit more for the margin requirement, which is always nice. So I like those. I like those. The fact that they're rising in price when we speak, for me, under vol days like this, I would say, you know what? It'd be really nice if I got this, but if I didn't, it'd be okay. So I'm going to put a limit order out. It's got a ton of volume. I'm going to put a limit order out, and I'm going to see if I can get it 10 cents cheaper, 30 cents cheaper. I try to get the put side 30 cents cheaper. I try to get the call side maybe 10 cents cheaper, right? So your total outlay is $200. Maximum target is $2,000 less the $200 you paid. And if you've got yourself an iron condor out there in the wings, that's going to take care of the premium that you spent.